Welcome to everyone coming over from Live Trading with Benzinga. This is Futures Trading with NinjaTrader, the half hour per week where we set aside the individual stocks, the individual tickers, and we look at the futures markets. I'm talking broad-based indexes, the S&P 500, the NASDAQ, the Russell. We're talking gold. We're talking crude. We're talking the future. The future is now. On Futures Trading with Benzinga and NinjaTrader. Hit that like button. Let's roll this intro. All right, I have to bring on Jim Cagnina. He's a senior education and training specialist for the NinjaTrader platform. Jim, good morning. How was your weekend?
Good morning, Spencer. It was awesome, man. Saw some great football games. A little bit cold here for this part of the country, but I'm from Chicago, and you're from Detroit, so it's nothing.
No, well, it is cold. I'll admit that it's cold, even for Detroit. But enough about the weather. How are we weathering today? Let's just start with the overall S&P 500 futures. I see some green on my screen, Jim. That doesn't look right. Is that right?
Yeah, I mean, it's. Let me just kind of straighten us out a little bit. We're right at that 38.2% retracement. My trend line has been broken significantly on Friday. We closed really high, really strong, and then almost always, not always, but almost always, when you have a move like this, and you close at the high, right? There's no wick here. It's like we closed at the high, maybe a couple ticks off. The next day is almost always a continuation candle. Will it hold today? I don't know, but we'll find out. I mean, typically it does, and we're at that that 38.2%. If we close above that, we could even have another continuation day. Long way to go, though, to get to my bigger support and resistance line at 45.02. So volume is kind of getting back to normal today also is the other thing to keep in mind. And before we even move this chart, I do want to remind everybody, the Fed's going to start wheeling out their speakers, right? So we had a Fed meeting last week. So you're going to start getting these people out in the community doing speeches or saying stuff or being interviewed. Mary Daly today from San Francisco, and then Esther George from Kansas City. Keep that in mind going forward here, because this is what they need to do. This is what they do, I should say.
How do Fed speeches like that, do they impact the market on any given day, or is it just like in the aggregate type of a thing?
It could be both. I mean, you could literally have, all these Fed presidents and then members of the FOMC that aren't a Fed bank president. When they all have different opinions, and when they vote at the FOMC for interest rate hikes, it's a vote. It's not Chair Powell saying we are doing this.
Right.
So he's got to get consensus on all these people, and so then they go out and they express their own opinions, right? Which might be a little out of line. They toe the party line for sure, but Mary Daly says, hey, we're gonna have at least 5 rate hikes, I think. She says that today. Well, things are gonna get jiggy, to use a technical analysis term.
Yeah, that's an official term. So anyway, just to figure it, get an idea of where things stand. So S&P, we're up, but for your charts, we're sort of in the middle of nowheresville right now.
Well, I mean, we're retracing back up, right? We're retracing back up. I think,
is that a bullish sign or a bearish sign? It sounds like you are very skeptical.
Well, the market, I think the stock index future is going to establish equilibrium, and whether it's 100 points higher or 100 points lower is unclear. But the one thing that I take away from this chart is the Fed did, take away some of that market uncertainty that we saw in this big drawdown, and that's part of this. So the stability comes from when S&P 500 companies, they could handle interest rate hikes, they could handle the price of the dollar appreciating, they could even handle Omicron now. So it's really the uncertainty factor which dislocates price, and I think a lot of it is out. Even though Powell did say one thing that annoys me, last week about I'm not going to give you an exact interest rate hike schedule. I'm not going to hold the market's hand. Wasn't crazy about that. The market wants to know certainty, and if you have kind of a relatively certain sketch, tell us. But I think that's what we're seeing now. I think we're seeing some comfort.
Yeah. Okay, so this is the S&P 500, but let's pivot over to the indexes that have been brutalized a lot more, which is the NASDAQ and the Russell. So both of which are outperforming the S&P today, but have also been lagging the S&P all month. So
that's right. This is the NASDAQ. This is the micro NASDAQ, one of my favorite markets in the world. You could trade this thing 23 hours a day, short or long, not have to be a pattern day trader. I mean, we're approaching the 38.2. Remember, in the S&P, we're already there. We're approaching it. We had a couple of good days. We're pretty much 100% in line across the stock index futures with respect to Friday and today so far. But you're right; it's been a little bit tougher, bit tougher to roll for the NASDAQ, and we'll kind of keep you on it. I think this isn't the weakest one, but it's probably the second weakest one.
So what's the weakest one? The Russell.
Well, here we go, baby. Russell. The Russell has experienced the death cross. We talked about this last week. You know, 200 moving average is the purple line, simple moving average. The black line is a 50 period, simple moving average. And we crossed under it. It's called the death cross. It's a textbook thing. I don't know if that means anything other than we're supposed to be officially in a bear market now, and looking for places to sell in the channel.
I don't know. Be honest, Tim. How much weight do you put in that? And I won't judge you for your answer, but
yeah, no, I don't put a lot of weight in it. I just thought it was fun to put it on the chart. And I put weight in this channel here. I mean, this trend is down. It's a channel. It's not even a trend line, and we're not even to the 23.6% retracement. So we're way behind the curve. And these are small cap stocks. They're going to have a harder time with the dollar appreciating. They're going to have a harder time with interest rate hikes, because they're not big enough to sustain it. So this is and there's a rotation supposedly. You'll probably know more about this than me, from these growth stocks to value stocks.
Okay, there's a couple questions in the chat. The point of this show is to educate people about the futures market. So if you have any question about the futures market, drop in the chat. And there are a few in there that I want to get. First up, Michael Johnston, what ticker do you use for the S&P? Don't apologize, Michael.
Yeah, okay, so there's a couple. Let me just kind of lower this chart for a second. So in futures trading, they're quarterly contracts. And right now you have two options. You have the E-mini S&P, which is traded it's ES, and March 2022.
So it may be /ES on your platform, or star ES on others, but try the /ES, or maybe it'll be at ES, but ES is the main part of the S&P futures ticker symbol.
Yeah, and sometimes it's like ES_F. And that, that _F means futures. The second one to look for, though, is the same market. It's this 1/10 the size smaller. It's called the micro E-mini S&P, and that's MES. That's MES. So they just put an M in front of the ES for micros. That's all.
Okay. So the exact ticker, again, the format of it may depend on whatever platform you're on, whether it's like a slash or an at or an ES_F. But I would say just experiment with typing different things and see what comes up for you, because every platform is like a little bit different. But as far as what the actual tickers are that you can type in. And then Sam Remington asked, did he just say you can trade this 24 hours, no day trade limit? Question mark.
So it's a 23-hour market. So there's 1 hour where it's closed. Sunday night you open up at 6 o'clock Eastern, and you go all night, all morning, all the way till 5 p.m. It closes for an hour. That cycle repeats all the way through till Friday, and there's no pattern day trade rule. You don't have to fund with $25,000. 25, yeah. As a matter of fact, you could trade the micro ESs and fund with hundreds of dollars. So it's really accessible to everybody. There's no uptick rule. There's no minimum amount of trades or maximum amount of trades. It's all up to you to decide.
And that's kind of the difference in what you said before, as far as like the ES and the micro ES. The main S&P 500 futures contract, each contract has, one contract is a certain size, right? Certain amount of capital, but the micros are what? They're 1/10 the size, so it just requires way less capital. Is that right?
Yeah, for sure. And everyone has a different amount of risk capital that they
Right.
use to fund futures accounts. Everyone's unique and different, and it gives you some flexibility. It's just about anybody could participate.
Yeah. So and Left Foxy, just to show this point, Left Foxy noted that it's ES1 exclamation mark. So it depends on whatever platform you're on, but the ticker is generally the same. I'm not sure what it is on NinjaTrader. I'm sure Jim, you know what it is. Is it whether it's like,
Yeah, we're ES 03222.
There you go. So let's go back to the NinjaTrader charts. And again, the reason that we do this show with NinjaTrader specifically is because their platform is optimized for trading futures. They have different features, and that's sort of like that's your bread and butter, right, Jim?
Oh yeah. I mean, it's a super fast data feed, super fast trade execution. It's a very stable platform, and in my personal opinion, it's the best. But I'm biased.
Well, yeah, and different platforms are optimized for different things, and NinjaTrader is optimized for futures trading. So let's move away from the broad-based indexes. Jim, let's talk about oil for a second. All right, I would like to see your oil chart.
This is crude oil. This is what's called the West Texas Intermediary Light Sweet Crude, very popular.
Ticker,
and I do
please.
have the mic. It's MCL because I have the micro MCL.
Okay.
Right, and then the classic, the bigger size one is just CL.
Okay.
And I'll show it on the trading ladder in a second. But we're in a bull market now.
Mm-hmm.
I mean, I have a trend line there. I mean, there's not a lot of sellers. This is kind of a strong upward trend, and the fundamentals kind of reflect that. It's a supply and demand market. As a matter of fact, I even extended my fib line to $103, right? So if you could say at minus 61.8, $103, it's not unrealistic. So I don't think the top is in yet in this particular market, and it will affect markets like the Russell, right? That has energy needs to do their thing. So I'm going to keep an eye on this for sure. I mean, hopefully things turn around. We do have a slight kind of turnaround going on, but we're still at $86, man. That's big. And Brent is probably $2 above that, 88, $89.
So no specific levels to have on our radar for crude right now.
Well, I'm a fan of these fib lines, Fibonacci lines.
You like your fibs.
Right. And so I drew a fib from swing low to swing high. It just kind of mirrors my dotted trend line. Moving average crosses up, and this 23.6% would be $83.33, give or take a little bit. That's going to be long-term area of support. So we'll see. Who knows? Anything could happen. There could be an OPEC decision to do something. There could be a war in Ukraine. All this stuff's going to matter.
Yeah. All right. Let's go away from oil. Let's go look at the rest of the markets, and then what we'll do is after we run through the different markets, Jim will always have for us a trading tip of the week. We will take questions from our chat. We will try, if we can, if the stars align, we can hopefully set up a trade for you live on the show. But Jim, let's go over to the gold market now, and you can tell us what you're seeing there.
Yeah, gold, again, it's risk off now on gold. I mean, the Fed said its thing. This market was a lot of market uncertainty until the Fed did their thing. And then gold kind of broke back down below $56 from its high, right? This high up here was, just to get the tip right, 1856. And now we're at 1794. So we're below the magic 1800 level. And we're still, $60 less than we were last week. And this was 100%, in my opinion, taking some uncertainty off the table after the Fed meeting. And so right now, we blew through my trend line at the bottom. We blew through this particular support and resistance line, and we're down to 23.6. I'd be looking for places to sell this market on a daily basis.
Okay. I mean, you could say that about gold for the last how many years? You're looking for places to sell,
Yeah.
So anyway, okay. The gold is a snoozer, though. Let's move on. What didn't we get to? We did not get to Bitcoin.
Well, we have Bitcoin. Yeah, we have Bitcoin now, man. We have a triple step. Here's support and resistance number one, right? We bounced off against it, finally break through. Then we have the next step, step two, level two, same thing. Bumped up against it, bumped up against it, fell through. And now we've established another shelf here. This is the futures, keep in mind. This is the reference rate, 35,425. And we'll see if this finally holds, right? Finally holds and bulls can get their feet in here and move this thing up. We'll find out. But right now, I'm not too enthusiastic.
Not too. I mean, yeah, you can just see like step down. Every one of those green candles, every one of those pops, I should say, has been followed by just step down selling. So I mean, that's the trend. So these red lines you've got here on the chart, these are like, what do those signify for you?
I'm sorry, Spencer, say that one more time.
The red lines there.
Yeah.
Well,
so they're just support lines. I just kind of drew manually, just trying to pick off the bottoms. And in this first one, 1, 2, 3, 4, 5, 6, 7 times we had a serious attempt. This is a daily chart to break to bounce off of here, and then finally we broke on through. Same behavior happened here. 1, 2, 3, 4, 5, 6, and then we finally broke on through. And when I say broke on through, I want to see a close either above or below. And we saw this close here, and now we're doing it again. It's like 1, 2, 3 times, and it's telling me be careful if you're long right now.
Okay, so back to the chat here. H. Roy asked, sorry, I'm getting that banner off the screen. H. Roy asked, what does one invest in for oil futures? So, Jim, there are two different oil futures markets, right? There's the WTI and there's the Brent market. Those are different products or different markets. What you trade the WTI? Can you explain the difference there and why?
Yeah, and there's actually 3 benchmarks. There's the WTI crude oil, which is delivered at Cushing, Oklahoma. So this is North America, right? And it's light sweet crude, and it's very desirable light sweet crude. In other words, it's easier to distill than some of the other quality of crude. The second one you mentioned is Brent crude, very widely traded, very popular. It's North Sea. It's a light sweet crude also, but it's a little less light. And so it does trade at a couple of dollar premium lately over the WTI. And it's a liquid market. You could focus on that as well. The third one is the Dubai sour crude, which is also very popular. I like to focus on the CL. I think most of our customers do too. It's based in the U.S. and we have terrific information about this market. We have the Energy Information Administration does a weekly and quarterly and monthly reports on the supply and demand picture here. That they're a division of the Department of Treasury. So you get extra information here in the U.S. on this particular market, and it is a U.S. crude. So this is why it's my favorite. So it's CL or MCL, depending on which market you want to get involved in.
So again, what you're looking for is like a liquid market, pun intended, and in Jim's case, he likes the U.S.-based market.
Yeah.
Yep. Okay. Awesome. All right, Jim, let's look at any treasuries market. We have not gotten to treasuries yet. Let's do that real fast, and then we can go to the tip of the week.
Okay, so treasury bonds right now, I was bearish for a long period of time. We've kind of stabilized a little bit in a sideways type of pattern. And this really, to me, says the yield curve might be kind of starting to what I'm going to call flatten, because this is the longer end of the yield curve, and we do see some appreciation, even though, remember, these are inversely related to interest rates. The Feds are going to raise rates. When the Fed does raise rates or announces they raise rates, typically, historically, you see that yield curve flatten. In other words, The long end of the curve isn't as steep anymore. And so that's why we're seeing, yields not moving as much as we would expect. And this is a price chart, so you got to think inversely.
Right. So down is up and up is down in a way.
Yeah. If you think yields are going up, then prices are going down. If prices go up, yields go down, which is a little bit counterintuitive to what the Fed did. But again, I think this is kind of a natural phenomenon with the yield curve. And I'm still overall bearish here. I think we're going to see lower prices soon.
Okay. Jim, let's get to the tip of the week. You ready?
Yeah.
All right. Where's my tip? Where's my fun little tip of the week thing? All right. What do we got? Oh, earnings.
Hopefully I wrote a complete sentence here. Big earnings week. And, more than 20% of the S&P and some prominent names in the Dow are expected to provide quarterly updates this week. We have our focus is on Omicron. Our focus is on interest rates. And sometimes we take our eye off the ball, which is, hey, what are these companies really doing, right? How are they performing? So I think we're gonna pay attention to these today. Tuesday, Wednesday, and Thursday are going to be big days. You probably have a better pulse on actually a schedule than I do, but this is on my radar.
Yeah, if anyone is interested in just the calendar of earnings that we're going to get this week, let me pull it up on my screen here. Look at all these reports. Right, tomorrow morning, big names like ExxonMobil, UPS. After the close tomorrow, GM, Google, AMD, Starbucks. You got Facebook/Meta, I guess Meta now, on Wednesday, right? Thursday is Amazon, Snap, Ford. Like Biogen is Thursday. You got some big names. AbbVie is Wednesday. Honeywell is Thursday. Bristol Myers Squibb is Friday. So really Tuesday, Wednesday, Thursday are your biggest earnings days of the week. And in the obviously, like in the long term, fundamentals matter. In the short term, they don't always matter, but they can turn the market. We saw that happen last week with Microsoft. And Jim, I'm sure you saw this, but let's get your take. After 4 p.m. on Tuesday, the whole market was trading down. The futures market was still active, right? And Microsoft came out on their earnings call and gave really good guidance on the whole market turned, futures markets included, right? They turned on Microsoft guidance that they gave during the call, and that can happen. And this is why we talk about the importance of futures, because the stock market goes 9:30 to 4, unless if you're trading after hours or pre-market. But futures market is active almost every hour of the day, and so that market is pricing in these earnings as they come. So it can be volatile.
Yeah, that's right. And so that's the great thing about, especially the NASDAQ, remember it's a market cap weighted index and a modified market cap weighted index. And, when someone like Tesla says something or Elon Musk does something crazy, it could move the whole index. You're right. Now you could participate at night and you don't even have to participate with a big contract. You could do a micro contract.
Yep.
So you're absolutely right, Spencer.
All right. So how are you sort of approaching this week, Jim? Do you want to try to set up a trade for us? Sometimes you have active trades on. I don't think you have any trades on right now. But how are you just approaching this week right now?
Yeah. So right now, today,
Yeah.
Every day is going to be different this week. Every day is going to be different. So be careful with what your bias is. ES is up 30 handles today, 30 points today on a volume of 718,000. Volume starting to normalize a little bit. And I would kind of once you have your bias established, I would work with your indicators and I would be patient and I would look for areas to participate. So as an example here, I would see, we have a positive oscillator. We have a moving average cross that's separated. Fast over slow. We have a VWAP that's positive. I'm looking for places to buy right now, and I would kind of look off my candle chart here in the top of the point of control and be like, I want a little bit of a pullback, and then I want to try to buy a contract. So what I just did was I used the chart. I sent an order again. I'm in sim live mode to buy a contract at 44, 45, 25, and it's mimicked on the actual trading ladder as well. There's my order. It looks like it's pretty far away, but man, this thing moves and it can pick it up easily. So I would be patient. I would wait for pullbacks. I would go with the direction of the day. And that's how I'm approaching every single day this week.
All right. And right there, just in case you couldn't see it, that was the chart that Jim is on right now is the S&P futures. And that's is that the chart? Is that the market that you trade the most?
Yes.
Yeah.
Yeah. I favor this. It's very liquid. And it usually up in other, notwithstanding next week, behaves in a normal way, So for sure, I like this market. And if you want to do the smaller one, you could do the smaller one.
Awesome. Any questions for Jim Cagnina, who again is the senior education and training specialist for the NinjaTrader platform? Any question about futures, drop them in the chat right now. If for whatever reason you think of a question later and you want to reach out to Jim directly, you can do that. There are many ways. One way is you can go to NinjaTrader's events page, which I have up on the screen right now, which is also in the description. It's ninjatrader.com/events. And this is where, Jim, you're posting your webinars, right?
Yeah. So this is a kind of a new thing now. We're going Monday through Friday. We start at 9:10 Eastern time, and we look for trade setups, just like the one that we see on my screen. That's the sole purpose of this thing. And it's a really nice community of folks coming in. Yep. Everybody's invited. It's free. You can see it on YouTube or through the new page that you see there, the /events page. And every morning we're going through these markets. We're looking for trade ideas. We're implementing our trade ideas and talking about them. So it's everybody's welcome.
Yep. And there are more resources in the description. There is ninjatrader.com/futures. There is ninjatrader.com/get started. And I think the main page is the ninjatrader.com/platform trading page, right? Which is where your education is.
And on the YouTube channel, there's a bunch of archive events about all sorts of different things.
Yeah. And it's a great point from Michael Johnson again in the chat. I mean, these micro products were created specifically to lower the hurdle, to lower the barrier to entry for more people, right? There's micro Bitcoin, there's micro S&P, there's micro almost anything, right, Jim? And that's the idea.
Exactly. And there'll be more micro products coming from the CME. The idea is, again, let's make these futures markets accessible to everybody. You could fund with hundreds of dollars instead of thousands of dollars. Which, risk capital only, everybody, remember, a lot of leverage, a lot of volatility here. So be careful with the day trade margins, but you have that opportunity to use your risk capital in a more efficient manner, in my opinion.
Awesome. All right. Jim Cagnina is the senior education and trading specialist for the NinjaTrader platform, and joins us every single Monday for futures trading with NinjaTrader, answering your questions about futures. If you have any questions for Jim, I would highly recommend you click on any of the links in the description of this video. That'll take you to those take you to a variety of pages at which you can contact Jim or someone like him. Any final thoughts for us today, Jim, as we wrap up?
No, man, this is Mondays with you is the highlight of my week. Appreciate being here. It was a lot. It was good. And just leave this with everybody. Be safe out there and be good to each other.
Yeah. It's stops. Have your stops, right? It's probably that's evergreen advice, right?
Yeah, for sure. Have even if it's a catastrophic stop loss, get it in, because we see this thing moves and moves real quickly on a snap of the fingers.
That's it. All right, Jim, we'll talk to you again next week. Good luck out there, everyone. I will talk to you in about a half hour or so on Benzinga Live. And good luck, Jim. Good luck. Stay green, all right?
I will. Thank you, Spencer.
All righty. See you guys over on Benzinga Live.